In this video, we're going to talk about how you can win at this game that we play that is called day trading. Now, it is not literally a game. This is a very, very big and serious business, and it can take your money very, very quickly. Not only can it take your money, but it can also drain you of mental capacity and mental equity as well. So I've seen a lot of traders, newer traders, some traders that have been doing this for a while and haven't really, kind of planted their feet in the ground, absolutely get chewed up, eaten up, spit out alive. I want to kind of tell everyone, as long as you stick to it and you continue to focus on your rules, your trading plan, your strategy, and your risk management, you can come out on the end of the other, kind of side of the tunnel and actually start to see the light and become a little bit more consistent as time passes by. Now, social media has kind of ruined that for a lot of new and younger traders just due to the fact that everyone sees the big flashy highlights, the big games. I've been victim of it myself, where in the beginning, when I first started off, there wasn't too many people on social media. I started 8 years ago, and in anyone that I found that was making any type of money like this, doing trading, I immediately gravitated towards them and tried to learn from them. But I've also been on the other side where I too have posted up bigger days and bigger gains. And sometimes I kind of pull back a little bit because it doesn't really help the other trader. Yes, it looks great. It looks, fantastic. And it is something to celebrate. However, a lot of times people with a lot less money in maybe their trading account or a lot less experience tend to see that and take it the wrong way and think that it's very, very simple. It took me many, many years before I was able to get profitable. I've been doing this for around 6 years full time, 8.5 years since I've started my journey. And realistically, the last 4 years being solid, like very, very consistent to where, I could completely live on this income full time. Now, with that being said, we're going to talk about a couple of things. The major thing that I want to talk about in this video is you have to understand that you need to absolutely be trading with the trend. You need to understand, are you a swing trader? Are you a day trader? Are you a scalper? A lot of times people come into the markets and they see a trade setup, they get into that trade setup, it goes in their favor for a little bit of time, and then it starts to pull back. And they become victim to kind of holding this position and thinking and hoping that it's coming back and it's coming back and it's coming back. The market doesn't have to do anything. What you need to understand is your overall kind of risk tolerance. How much are you willing to risk? What is it? What does your trading plan say? What does your strategy method kind of setup say? What do you have in your journaling, in your notes that says, I need to stop trading? What do you have in your kind of whole, outline, in your whole plan and process as a whole? What does it say when to get out of the trade? Now, if we look at something like Tesla today, Tesla provided 2 fantastic trading opportunities, one of them to the long side, one of them to the short side. Now, you're going to have 2 different types of traders on both ends of the spectrum. What that means is you're going to have, your perma bulls who believe that stocks are only going to go up and to only buy the dip. You're going to have your perma bears who believe that the market and the world is coming to an absolute crash and going into absolute destruction. And then you're going to have your realists and your traders in the middle who are going to kind of be more accepting to the fact that the market's going to move up as well as move down. You just have to be on the right side of that move. That's kind of where I fall into. I don't really care if the market's going up. I don't really care if the market's going down. Now, obviously, I don't want the economy and the whole world to come crashing down. So, I'm not like a perma bear, and I'm not a perma bull. It really doesn't matter. At the end of the day, I've got a mortgage, I've got multiple cars that I need to pay for, I've got food that I need to put on the dinner table for myself, I've got things that I want to do, vacations, hobbies. A lot of stuff comes into real world and activities in real world life, and we can't have such a personal bias that we need to kind of stick to just trading one side. So if we kind of look at my strategy and the way that I trade a multiple amount of different strategies, but one of the strategies that I like because it's very, very simple, it's easy to follow, and the rules are very, very, very clear. So this line that I have in my chart is just a simple 20 period moving average. It's the 20 SMA. What we are looking at here is the 5-minute time frame. All I am looking for is those change in trends, those those breaks and those kind of, retest in the change of that 20 period moving average. So if you can see here right off the bell in the pre-market, we were trading below the 20 period moving average, and then we close over. I'm only looking for a couple of things to happen. I need this candle to close over the 20 SMA, and I need the next candle to take out the high. As soon as that happens, I'm going to go ahead and get long. Now, my stop loss on this particular strategy is 1 bar. There is no ifs, ands, or buts about it. There is no, well, it took out my 1 bar, maybe it's coming back, the overall market looks strong. We're looking at Tesla, the Qs look great. Well, what about Apple? But Meta's pushing, but why is Tesla falling? None of that matters. We're trading Tesla. We're going to give ourselves 1 bar. This is our absolute stop loss, guys. This is our absolute entry here. We need the next candle after we close over the 20 SMA to go ahead and get in long. Now, when it comes to taking profits here, what we are looking for is 2 or 3 or 4 candles higher. Okay, so what that means, if this is our entry candle here, this next candle here is 1 push, 2 push, we can start taking profits on this candle, 3 pushes, 4 pushes. You see that, how that works? 3, 4 pushes, you start to get a little bit of change in trend. And that doesn't mean that it always has to change in trend every 3 or 4 pushes, but I like to be safe on my risk management side, and I like to grab those profits. Now, if I take all this, junk off the screen here, and we actually can see, what is the actual price. If we were going to get in here on this particular trade, the entry point, the pivot point, right? The pivot point means the area of interest, right? We are looking to do something at the pivot point. What are we looking to do? We're looking to get long. 254.75 is our pivot point. We need that price action to be taken out. It does get taken out here on the next candle. This is 1 push, this is 2 push, this is 3 push. Pushes higher, and that price on this candle close was $257.48. So from a price of $254.70 to a price of $257.50, we are talking about almost a $3 move. Now, my general kind of standard position sizing on Tesla is 10 contracts. Yours might be 1, yours might be 100. It's all up to you to kind of figure out how much you're going to make. For me personally, if I can take $1, $2, in this case almost $3 on a move like Tesla, it's almost a one and done trade for the day. You don't really need to be trading anymore on this particular name. Now, that was trade setup number 1. This was an absolute winner here. You can see the next setup that comes is going to be here. I live in California, so 7:30 a.m. Pacific Standard Time. You can see once we close below this 20 period moving average, let me take this one off of the screen. You can see that once we close below this 20 period moving average, our entry model is going to be simple again. Now, you may be thinking, well, we were just going long. How did you know we're not going to bounce? That's a great question. I do not know that we are going to not bounce. What I do know is that I have a strategy with rules in place. So for example, now that we have closed below the 20 period moving average, my stop loss is here. If this candle here, right? If this candle here is the reason why we are going to look to take a short position, it's our pivot candle, then I need to only max lose this 1 bar. Now, all I'm looking for is the next candle to take out the price action, which it does. Now, in this particular situation, we do drop and then we do bounce. This particular bounce here is what gets a lot of newer traders very, very, very scared. And a lot of traders start to panic in this situation, and they maybe even sell because they're worried about the position coming back up and stopping them out prematurely. So again, if your entry is here and your stop loss is here and you have a set rule that you have to give it 1 bar, right? And that's all you're giving it is 1 bar. Let the trade play out. Sit back, breathe, take a walk, do whatever you need to do. Put a hard stop loss, right? Put a hard stop loss, because if it does close above that, you're just going to get exited out of the trade anyways. Let the trade play out. And in this moment here, 5, 10, 15, 20, 30, 35 minutes later, it now puts in a new low. So what are we looking for here? If we're looking for 2, 3, or 4 pushes below our entry to start taking profits, this would be considered push 1. These 2 candles here are more of a pause rest candles. I'm going to group them as 1. This would be push number 2. and this would be push number 3. And if we look at the entry price here of 252.89 to where this candle closes is 248, another 3-4 point winner on the potential name. If you would have just taken these 2 trades that essentially happened within the first 1 to 2 hours after the market opens, you would have taken a total of 5 to 7 points off of Tesla and absolutely washed your hands of it. Now you may be looking at the chart and thinking, well, it dropped all the way from the entry price of 252 all the way down to 242. That's 10 points. I missed out on a lot of money. That's where new traders start to kind of spin their wheels and start to self-destruct. Don't worry about what happened after you're out of the trade. Worry about your strategy and worry about where you personally took the trade. I don't care if I get out of a stock for 2 or 3 points and then the move ends up going 100 points in my favor. It doesn't matter. At that point, that trade is not my trade and that is not my money. So all I want you to focus on is being consistent with your rules, being consistent on where you take profits, and being consistent on your stop loss. If you start to practice this for 30 days, I can almost guarantee you that you will either be net positive or on the road to being net positive on those groups of trades. A lot of times traders try to pick the bottom and they try to pick the top and they try to guess where we're going to stop and they try to guess where we're going to go. There is no guessing when it comes to trading. It's all on the charts right in front of your face. And I tell this to people in my Discord all the time. The chart is in front of your face. Just play the price action and react to what's going on in front of your face. It's not that difficult. Trading is a math probability-based business game. Okay, so what that means is you're going to be on the right side of probability, you're going to be on the wrong side of probabilities numerous times, hundreds of times, thousands of times, but we need to only risk that 1 bar, because when we only risk 1 bar, we are going to be taking profits at 2 Rs, which is a 2 to 1 R to R, 3 bars, 4 bars, 5 bars. If we hold runners and we move our stop loss, 6 bars. Sometimes you get a move that runs in your favor, like this one, all the way down multiple bars. So what you can do here is on that second and third push, start taking half size off and then move your stop loss down a little bit. And then as we put in a new leg, move it down a little bit. So if it does bounce and you do get stopped out, you're stopping out in the profit, in the green. If you guys are looking for more information on how to trade, more information on how to be consistent, you want to trade with me, you want to trade with my team, you want to get access to the Discord, make sure you guys join evolutiontraders.com, sign up, become a lifetime member. I'm talking live in there every single day. I'm putting watch lists on, I'm doing live technical analysis, I'm going over my personal trades each and every single day. I also do one-on-one coaching calls. I also will reach out to you and kind of build a trading plan according to what your portfolio size is or your account size is that can work for you, so you're not over leveraged and you're not trading the wrong ticker symbols. With that being said, all those links are down in the description box below. If you guys want to trade futures, I work with a couple of great futures prop firms. I'm funded with 3 different ones: Top Step, Surge Trader, as well as Apex. So Apex is going to be futures. Surge Traders I use to trade equities, which is stocks, and then Top Step, I also trade futures as well. So Apex I use because they're very, very good. In fact, Apex right now is running a 90% sale. It's like $15 for a $100,000 static account, which if you can pull $500 in 1 month off a $1,500 or a $15 investment, it's a hell of a deal, right? So I'll see you guys all on the inside.